Good morning, early morning traders. This is Joshua Logan. I am with Winmore Forex Trades, and I just want to show you guys real quick. We finna go do a walkthrough on the Canadian dollar and the Japanese yen. So this is the monthly time frame. We're gonna start with the monthly time frame, get direction. Daily time frame, we're gonna be using it for high and low prices. The 4-hour chart is the actual chart we're going to use for entry, and if we don't have any type of signal, we'll go to the 1-hour chart to get a closer look to see if the trade plan, if the risk on the pips is too much. So we'll go to the 1-hour time frame to find a smaller risk to keep that high reward off the daily time frame. All right, so here is the monthly time frame. We're using the monthly time frame for direction. So first thing we want to do is we want to separate the market into a buy zone and a sell zone. Right here you can see the market was in a downtrend, and then now the market is starting to go on a uptrend. So we're going to bring in smart trend lines, and as you can see right there, market has broken that trend line, so we're going to bring in a uptrend line at the lowest point of this new uptrend up, and we can see that this trend line has been broken. So let's bring in another downtrend line at the highest point here. That one was taken out as well. So now let's bring in a new one here at the lowest point, and we have us a trend line here. Get rid of these because these trend lines are no longer any good. And right here you can see we had a downtrend going, and the market broke this downtrend and then started its new uptrend right here. So when we're looking at the market right now, stochastic is going into the stochastic is going into the overbought zone, looking to start selling. Let me get this off of my screen real quickly. Okay, so we have a downtrend that's been broken. We have an uptrend that's going right now, a very new uptrend. We're gonna bring in Fibonacci's. Use our smart fibs, and on this Fibonacci level, we have a 786 bounce. Oh no, it wasn't a 786. It was above the 786, because this would be this fib would already be established. So it was going up to the 618. That is previous resistance here in this in the past couple of months. That is previous resistance. So this market is bullish. We are going to look at this market in a bullish perspective. So we're going to be looking to buy the market according to the monthly time frame. We're looking to buy the market. So on the daily time frame, we're just going to try to gauge the overall movement of when this downtrend was broken, so we can start bringing in crown formations, and to kind of gauge on how far down to the south this market wants to travel. So we're going to come back here to the lowest point of this trend line, and to the lowest point of when this bullish trend started, and we're going to bring in trend lines. Oh, okay, there it is. We have a trend line right there, and our next touch was right here. So we'll bring in another trend line there. And we'll reset our tools and extend these two trend lines. Alright, so we have an inner trend line. We have an inner trend line here, and we have an outer trend line there. Those two trend lines are kind of bunched up together, but we do have another touch here, so we'll bring another trend line there. All right, now we get a little perspective of what's going on. So at this moment, we have this trend line that's been broken. The backside of the trend line was tested and it held, and then the market gravitated to the next trend line. So we don't currently have a trend line break on this second inner trend line. So we're going to bring in Fibonacci's from the lowest point of that trend. So right now we have 1, 2 Fibonacci wave movements that have completed, and we do have one up AB boundary right here. So we have an up AB boundary. We have a 610. We have a 618 retracement. So that means that the market will go up to the 1618 D extension. So we're going to mark off the D extension. And that is our D extension. That is where we will exit our trade. This will be a position trade according to, the analysis we have currently at the moment. So we're going to type this out. This is our daily fib D. Daily fib D. And we're going to make that red just to reset. See if we can make that red. There it is. Alright, that's our daily fib D. And we're going to get a closer look. We don't have a crown formation formation on this chart. We did break this trend line, but in order for a crown to form, the market would have to take out this A, and right now the market is currently honoring this inner trend line, this inner trend line taken out, but it's honoring this inner trend line. So we're in the buy zone, and we are still looking to buy this market. So let's bring in a trend line at the top, bring a downtrend line, and let's kind of see where this market is heading. And right now we do have a downtrend line break. So the market entered into the sell zone, tested this inner trend line, held. Now we broke this downtrend line back into the buy zone. Now we're looking for buy signals. We have a nice low price here, and what we would want to do is we will wait on a counter trend line break. Hold on, let's get this cleaned up. So you want to wait for a counter trend line break here across the top of these candlestick wicks. Once the market breaks this counter trend line, we will buy the market at the close of the candlestick, and then your stops will go 10 pips below the lowest point of U-turn when the market broke this counter trend line, and we will hold that trade all the way up to the daily 50. That is the current trade plan right now, but let's take a closer look on the 4-hour chart, because you would like to place your stops below the A, which you place your stops 10 pips below the A, that would be a 370 pip risk going for a 770 pip reward. So for most traders, that's a lot of pips to risk. Most traders don't like risking that many pips, but risking only 31 pips or 41 pips, you would probably get stopped out before you get up here, because the market's going to do what the market's going to do. As long as the market doesn't take out the A, it has no choice but to go your way. But so let's take a closer look on the 4-hour chart. And not to mention, before we go, we do have a stochastic that is in the oversold zone. So we could have some little power going up to the bulls once the market opens. So let's go to the 4-hour chart. So the 4-hour chart, we got our understanding that we're looking to buy the market. So we're going to just focus on this most recent down trend and see if the market actually was, this downtrend was taken out. Oh no, that's fibs, excuse me. All right, let's get rid of those. Let's bring in smart trend lines. All right, so there is your downtrend line. We're going to extend it there. Your downtrend line was taken out. We have entered the buy zone. And just bring in fibs. Bring in Fibonacci's. And okay, right now on the 4-hour chart, we do have 1, 2 Fibonacci, 1, 2 down Fibonacci swings that have fulfilled, and we have this down AB boundary with a 618 retracement. The market has found resistance. Let's see, let's mark off that resistance level. That is a nice resistance level, as you can see going across the screen. We got resistance, and we have another point of resistance here. So it's looking like the market is respecting this resistance level. But since we have entered the buy zone, the daily time frame, we have broken a down trend line on the daily chart. Now we've broken a downtrend. On the 4-hour chart, the market is in the buy zone. We will gauge that buy zone by bringing in another trend line at the lowest point when this trend line was broken. And there it is. We have a different story that has been told, that is getting told on the 4-hour chart. The market was in the sell zone. We broke into the buy zone. Now the market has entered back into the sell zone. So since the market has entered back into the sell zone, let's gauge and see if that was a Fibonacci move that gauged this to enter into the sell zone. But see, this would be a sub AB swing inside this down AB swing. So this is sub A, sub B, sub C, sub D. Now we have another sub A, sub B, and the market right now has found a deeper sub C, and that resistance level that we marked off, that is the 118 Fibonacci D extension that this market will fulfill this Fibonacci swing. But since we have entered into the sell zone, we're going to go with the heavier movement, which is this down AB swing, and with us already having one sub A, sub B, sub C, and sub D Fibonacci swing that have already fulfilled. And we can bring in another downtrend line, and we can see on this downtrend line where the market actually broke, and that was a fall. We had a false break here, and now the market has entered back into the sell zone. So this is actually a good selling opportunity, and we have a 1618. We have a 618 retracement level. We have a 618 retracement. We have one, two, three levels of resistance. We have broken a uptrend line. We have entered back into the sell zone. So we have what looks like a channel that may want to start here. Now let's mark off this 618, this 1618 Fibonacci D extension. And there it is, just like that. You guys can see the channel as you can see the channel as the channels form. We've broken this uptrend line. Market is, we had a false break here. Now we've been back into this channel that's forming, and this is a great, this looks like a great opportunity to sell this market. And if we bring in another Fibonacci to gauge this movement here, you can trade this Fibonacci AB swing, and now you got smaller risk, which right here, smaller risk, 10 pips be above the A, you would only be risking 128 pips and going to get, no, actually that's too high of a risk to reward. It's too high of a risk to reward. So okay, so this upswing here, this A B Fibonacci swing, this D extension is the exact same level, support level of this A up, in this up AB Fibonacci, in this up AB Fibonacci swing. That is the same level as resistance. So it is a it is a great chance that this market could come down to this 1618 at the 83.5 value, or the 85.3, as we do have resistance, resistance, and resistance. And we have a stochastic that is oversold. I mean, it's overbought. And oh no, the daily has a stochastic that's oversold. So right now we have two conflicting stories on the daily and the 4-hour chart, because we have entered into the sell zone on the 4-hour chart. The daily time frame, we are in the buy zone, because we've broken this downtrend line. We've broken the uptrend line, then we've broken a downtrend line, bringing us back into the buy zone. But right now it looks like the market wants to test this inner trend line again. So now let's clean it up a little bit. Let's get rid of those Fibonacci's, and let's get rid of this Fibonacci. So here is the trading plan. Since we have entered back into the sell zone, and we have a false break, and we have those points of resistance, we are going to place our stops. This is the trade plan right here. Trade plan is, as a matter of fact, once the market opens, you guys could actually jump in to this sell trade right now, because right now you do have what is a this is in a aggressive counter trend line. Yes, this is an aggressive counter trend line right here, and that trend line was broken, so we would have sold here. But now, since we are in the sell zone again, once the market opens, you could start selling this market right now, and we would trade it to the Fibonacci D extension on the 4-hour chart right there. So trade plan is, how many pips is that risking? If we're going to go 10 pips, 10 pips above the A, long as the market doesn't take out the A, has no choice but to go your way. 10 pips, that would be 180 pips going for 106 pips. So that's too much risk to reward. So now we're going to go to the 1-hour chart. So we're going to go to the 1-hour chart, and let's take our Fibonacci D extension of the 4-hour chart, and let's link that to the some lower time frames. And we're going to try to find a trade here that's going to be more quintessential, where we don't have to risk as many pips. So, all right, just gonna bring in smart trend line here from the nearest move. You can see that same movement on the 4-hour chart that we just picked up. Got this downtrend line, got a downtrend going. We had a false break here. Market entered back into the sell zone. We bring in Fibonacci's, and we have a down Fibonacci AB swing. We have a down Fibonacci AB swing, and we have a 786 retracement. So blue goes to blue. That will be our exit. And as you can see on this one, the 618 extension on this AB swing is the exact same level as the Fibonacci swing from the 4-hour chart. That's the convergence we were looking for right there. That gives us a great idea to want to go ahead and sell this market. And right now, we do have, on this 1-hour chart, we do have a great high price. Now the 1-hour chart showed that it was just a low price. But okay, now we can bring in a counter trend line here on these candlestick wicks. And now once the market, see if I can pull up an illustration. Okay, let's get the color right. All right. So the market will break the trend line. Once the market breaks the trend line and closes bearish below this trend line, then we will sell the market. Once the market closes with a bearish candlestick at the break of this counter trend line, we will sell the market. And reset our stops. Our stops will go 10 pips above the highest point of when this trend line was broken. So 10 pips above where this market was broken, where this uptrend line was broken. 10 pips, that would be 10 pips above there. That's 85. That would be 8602. So let's see, we go to 8602. All right. Stops 10 pips above the highest point of when the market breaks this counter trend line. And our take profit is going to be the D extension. Your take profit will be 5 pips above your take profit. So 84.72, that would be 84.77. So there's your take profit. So now So now all you have is 22 pip stop loss to go get 102 pips. Now that is a better risk to reward ratio, and that's how you want to look at the markets when you're trying to find trades that's going to help your account where you're not risking as much and you're not risking a higher lot size. I see a lot of traders out here, a lot of traders out there, they're risking small pips, but their lot sizes are way too big. So you would want to you want to put at least no more than 3% in a trade. No more than 3%. No more than 3% in a trade. You don't want to risk no more than 3% of your account size in one actual trade. So, hold on. So that is our trade. We have our stops 10 pips above the A. Once the market breaks this counter trend line and closes bearish below this counter trend line, we will sell the market. We will hold our trade until our 618 extension has been hit, and once that happens, then we will come back and we will see what else is going on with the markets based off of what we have analyzed. And that is the Canadian dollar, Japanese yen. um, I will see you guys in the next video. I'm going to go through the Canadian dollar and the Swiss franc. If you guys getting any value, please like and share this video. You guys can check out my website, winmore4xtrades.com. I post my videos up there, my trades. You guys can also check out my fan page, winmore4xtrades.com, and like and share the content, engage with the content, share your trades and what you're looking at in the market, and I'll see you guys in the next video.